Hey everybody, welcome back to Is It a Buy, where we discuss stocks and determine if they are worth a buy or maybe a pass. My name is Corey. I'd just like to preface the video by saying I'm not a financial advisor. I'm just a guy who likes to talk about stocks, so please take what I say with a grain of salt, all right? Let's get into the video. Today we're going to be talking about the Quadruple Witching and March 19th, the significance of it and what this all means. So taking a look here, so the Quadruple Witching refers to a date on which derivatives of stock index futures, stock index options, stock options, and single stock futures expire simultaneously. All right, so all of these. Now, there are things such as the triple witching or double witching where 2 out of the 4 or 3 out of the 4 expire at the same time. But this one is the big one where 4 expire at the same time, okay? Now, quadruple witching days witness heavy trading volume in part due to the offsetting of existence futures and options contracts that are profitable. Okay, so let's get into some of these. So I think it's important to understand what options and futures are, as well as the index options and futures. Okay, so they're actually really not too different from each other. So options contracts gives a buyer the opportunity, but not the responsibility, to complete a transaction and basically purchase the shares of the stock. So they're given the opportunity, but not the responsibility. So if they want, they can just sell the contract instead of purchase the actual shares. And what this means is, and this is similar to on index options. So index options are the same thing. Essentially, they give them the right, but not the obligation, but this time to transact the index, such as the S&P 500. All right. Single stock futures contracts are legal agreements to buy or sell an asset at a determined price at a given future date. All right. Each contract, similar to options, each contract represents 100 shares of a stock. Similar to index futures, investors use index futures to bet on the direction of a stock, buying if they believe the index will rise and selling if they believe the market will decline. Okay. So important definitions there. Important to understand, and we'll get into why these matter. So the market impact of quadruple witching. So these witching days witness heavy trading volume. All right. One of the primary reasons for the increased activity is the options and futures contracts that are expired, that are profitable and settle automatically with offsetting trades. Okay. So these options and futures that expire in the money are basically settled automatically. All right, super important to understand that. And that's one of the reasons for this increased volume. So expiration of in the money options results in automatic transactions between buyers and sellers of the contracts. As a result, quadruple witching dates leads to an increased amount of these transactions being completed. So this is why these options and everything that we've been talking about are so important. We've talked about the options before. This is why this is so important. We're going to get into these numbers in just a second. Closing and rolling out futures contracts. Much of the action surrounding futures and options on quadruple witching days are focused on offsetting, closing, and rolling out positions. A futures contract contains an agreement between the buyer and the seller in which the underlying security is to be delivered to the buyer at the contract price at expiration. Okay, and they expire at the end of that day. So now here are some pros and cons. The pros: quadruple witching may provide arbitrageurs the opportunity to profit on temporary price distortions. Another pro: increased trading activity and volume happens on witching days, which can lead to gains in the market. Okay, so some cons. And of course, you got to take the good with the bad. And these cons really aren't they're kind of like saying it's possible that this could happen, but you'll see. So the cons: there is little evidence that quadruple witching leads to increased profitability, since market gains are usually modest. Another con: increased volatility can offer potential gains, but losses. So this is basically saying, hey, it's not 100%, but you can get gains, but it's not guaranteed for gains. That's essentially what this is saying. Kind of seems like a kind of covering themselves in what this means. So now let's look at a real world example of quadruple witching. Friday, March 19th was the first quadruple witching day of 2019. According to the Reuters report, trading volume on March 15th, 2019 on US market exchanges was 10.8 billion shares compared to the 7.5 billion shares average over the past 20 days. Okay, this is a lot more volume, a lot more volatility, and this is what we've been waiting for. We've been waiting for a lot of volume, a lot of shares to be traded, and this is really what's going to help us. For the week leading into Quadruple Witching Friday, the S&P 500 was up 2.9%, while the Nasdaq was up 3.8%. And the Dow Jones was up 1.6%. Now, I know these numbers are pretty small, but compared to for the size of these and how many different different stocks are in these, that's actually pretty good. Those are pretty solid numbers, not too bad. Okay, so now let's see why this matters. Let's see why these numbers matter and what the big deal is. So let's take a look. These right here are the call options for this Friday, so 3/12. Take a look. And so basically what I did is I have the strike price, how many contracts is right here. So remember, one contract is 100 shares, and here times the 100 shares, and this is how many shares each contract will basically provide as long as they expire in the money. Okay, so and then this last column basically takes all these shares and adds them up as they continue down. So it just continues adding them. Okay, so let's go look at some of these important numbers. So I highlighted some big numbers. Currently, we're sitting above $10. So if these options expire this Friday on 3/12 in the money, there will be an additional 7 million shares that will go into the stock. Specifically, this is for AMC. But I'm sure it's very similar for GameStop. Maybe the numbers are a little bit larger or smaller, but they're going to be proportionally, I would imagine, the same. So taking a look at the $15 strike price. If all of these contracts expire in the money at $15 and we close on $15 tomorrow, then there will be 16 million. Now, granted, we're at $10 right now. It's Thursday. Who knows if it'll expire in the money? But currently, if we stay above that $10 strike price, we'll have 7 million. This is great. These are a lot of shares. Now, let's take a look at the 3/19, the Quadruple Witching Day. The $10 strike price, instead of it being 7 million shares, is now 18 million shares. That's over double the amount of shares. Okay. Absolutely huge. And this is where we talk about with that increased volume, increased volatility. A lot of these contracts are going to have to be bought out. They're going to exercise these contracts. Granted, some people are going to sell their contracts, but that's okay. These need to be exercised. And taking a look, we have a whole week. If we can get to $15, that's 28 million contracts. These are a lot of contracts, and these are just the call options. This isn't the futures or anything like that. So keep that in mind. These are huge numbers. As long as we can continue this momentum and keep on, holding strong and making sure that, we do our best to just keep the price where it's at, it's going to be very, very good. This volatility is going to be huge. Keep in mind, we also have that new DTCC rule. That rule is essentially going to force these hedge funds to buy out of their positions. It's going to be so huge. It's so important that we hold our positions and that we continue to just do our best, buy more on the dip. We saw what happened yesterday. They're going to try to bring down the price. They're playing their own game and they're trying to scare us out of our positions. But it's so important that we hold true to our convictions. All right. I just wanted to bring this to the attention of you guys. I know a lot of people have been asking me about it, and I just wanted to be crystal clear on the significance of it. Now, granted, does this mean the squeeze is going to happen on the 19th? No, not necessarily. We need to be ready to hold. I'm thinking this as a long-term play, and that's really helped my mental health whenever it comes to this whole thing. So, maybe that's the strategy that you need to go with. All right. That's what I have for you. Thank you so much for watching. If you did like the video, please consider subscribing. I do like to put out a lot of content, just the newest content about what's going on in the stock market with stocks like AMC, GameStop, and so on and so forth. Also, if you wouldn't mind liking the video, that would really help the channel and really get the word out. People need to understand that, now is the time for diamond hands. Now is the time when we need to hold. And people need to know. All right. So thank you so much again for watching. Have a good one. Peace.